Okay, then namaste, adab, Sri Akal. This is CA Sankalp Kanstiya, welcoming each one of you in this amazing session on modern business environment, the chapter that we are now going to start. Wow, very nice chapter, and what a great person to start with. Somebody who has actually changed the course of modern environment. Shri, Mr. Elon Musk. Oh boy, right? Tesla, SpaceX, PayPal founder, all of these companies, right? The owner of them. And indeed, he has changed the landscape of the whole world. Planning to go to Mars very soon. He feels that Mars is a place where people can live forever. Anyways, we'll see what time shows us. But for now, we are going to start with this chapter. And the name of the chapter is Modern Business Environment. And indeed, the modern environment of business is ever changing. Who knew 20 years back, probably, that the likes of social media will capture the whole industry in a way which, unbelievable to think of. Who knows in the next 10 years how artificial intelligence will transform the whole world. So, obviously, just how things are changing is what is going to be discussed in this chapter. Now, I am going to discuss everything in detail. So, what is going to be my target for today? I'll tell you that first up. So, let me tell you that this chapter basically has three major concepts, so to say. Three major concepts, so to say. So, I'll just write down the chapter modern business environment. Okay. And this chapter is divided indeed into three parts. What are those three parts? One is called as quality, the other is called as TQM, and then we have something called as SCM, supply chain management. Now, when I speak of quality here, what they mean to say is the cost of quality, right? We all know how big, how high an emphasis is in today's businesses, the impact of quality is. So, cost of quality. Then, what is SCM? It is called as supply chain management. And the last is total quality management. Am I right, everybody? Okay, okay. Now, what is going to be a part of today's session? Pay attention. So, today's session is going to be focused on this. See, so basically, this chapter is divided into three parts: quality, TQM, and SCM. Quality meaning cost of quality, TQM total quality management, and SCM supply chain management. Our lectures focus will be on the three aspects. One, theory of cost of quality, the other the practical aspect of cost of quality, and then the MCQ related questions of cost of quality. So that is how the whole system will be worked up for us, and that's how we will approach this subject. Now, if you all remember my last session, just the introduction session, I told you all that I have a particular way of teaching any subject, and my way revolves around examples. So that's what I usually start with. Then from those examples, I connect to the concepts. From the concepts, I will take you to the practical questions. So today we are going to solve two practical questions as well. Yeah. So today we are going to solve two questions, approximately 25 MCQs in today's session, and theory relating to cost of quality. Now, where does this whole concept of cost of quality originate from? Let me tell you, whenever you hear this word quality, it is synonymous to one of the world's most developed countries, and that is Japan. Yes, That is where the majority of the quality concepts were introduced, were bought in. And yeah, here we are. Quality and Japan are almost equivalently used. Yes, I'll give you a example. Just listen to my example and you'll realize that why and how Japan has conquered the whole quality system throughout the whole world. Do you remember Japan's bombing of World War II? Who bombed Japan? Hiroshima and Nagasaki was bombed, right? By whom? By America. United States of America, if you remember, bombed them after the World War II. Almost on the completion of World War II, they were bombed by Hiroshima and Nagasaki. They were bombed by America, who bombed Hiroshima and Nagasaki. And Japan was reduced to shambles. There was hardly anything left in Japan, and that is when they stood up and stood up very, very nicely. So, 1944 or so, Japan was bombed. Now, I had a perception that it is the United States of America who did wrong to Japan by bombing them, and that to a nuclear bomb. That was very, very brutal and unexpected. But then I got into the history and realized it was Japanese who instigated the Americans. In World War One, Japanese had bombed Pearl Harbor, which is in America, and that's where the revenge was taken by America in the 1944 World War Two. Yes, so that's when they thought that okay, how dare the Japanese people bomb us? Immediately they did not react because they did not have the resources, but they waited for the day when they will have all the resources, and World War II end was the time they thought of doing it. But after a few years, Japan was back to its normal, and it ensured that none of the bombings could destroy their economy. Yes, it was destroyed for a few months or so, but they came back and they came back very strong. And do you know which country is responsible for the revival of revival of Japan? You'll be shocked to know it is America. Yes, after this bombing of Hiroshima Nagasaki, America said, see, you bombed us once, we bombed you again. Hisab 0-0. Balance, settle down. Now let's be friends. Now let's help each other. So a lot of American economists and a lot of American quality specialists went to Japan to ensure that they are able to teach them quality. Because when these Americans reached Japan, they saw that Japanese products were hopeless. They were shoddy, not good quality. They were of shoddy quality. So that's where Japanese people thought that we want to become the manufacturing hub. We want to give the best products to the whole world. So the American economist and quality specialist said that, my God, your products are very bad. How is it possible that you will be able to give quality products? And that's where they said that for this Japan, it will take 10 years. And it will take 10 years and a lot of hard work for you to give the best quality products. Japanese people said, we are ready for hard work. We are ready to give 10 years and we are ready for hard work. You will not believe. They worked so hard that in a span of 5 years, they became the best provider of manufactured quality materials throughout the whole world. So much so that in the year 1960, they were able to come out with their own bullet train, world's fastest bullet train at that point in time. Even after 60 years plus, even at India level, we are not able to do that. But they did it. And how? So that's what Japan and Japanese people are. They are just too hardworking and ensuring that their country grows above anything else. And during that phase, they learned a lot of things. They ensured that this focus is always on quality, giving the best to the manufacturers. And that is where, once they started giving the quality products, they became the manufacturing hubs. They became the manufacturing hubs with the help of three concepts that we are going to study today. One, they incorporated the concept of quality cost in their manufacturing process. Then they also ensured that total quality management is incorporated in the product development, and the customer should get the end product with full clarity, called as supply chain management. So one thing led to the other. So obviously, focus was giving quality products in manufacturing, giving rise to total quality management products, giving rise to ensuring that customers are also happy. So, this chapter is going to teach us from manufacturing to customer support everything. From manufacturing to customer support everything. And that's what Japanese people are famous for. That's what Japanese people are famous for giving the best quality in manufacturing through use of three concepts which we are going to study in today's chapter: quality cost, total quality management, supply chain management. Are we clear with the first basic, with the idea of what we are going to study today, guys? Yes up, what's up? Now, cost of quality is what we will first understand, but before I make you understand the concept, I will start with an example which you will never forget in your life, and hence you will never forget the concept as well. My my example starts with my dream, a dream that I used to think when I was doing my articleship. So during my articleship days, you know. So just when I was almost of your age in CA final, planning to appear in some time, and obviously everybody has dreams, you should have. So I had this dream that before I turn 30, I wanted three things. One is uh, to have an iPhone. For some reasons, I am a die-hard fan of Steve Jobs, and so I wanted an iPhone. So I knew that it is only going to be possible if I clear my chartered accountancy examination. No other option do I have. So I thought, once I dream and become a chartered accountant, I will purchase a iPhone. Second, I am a big travel buff. So I want to travel 30 countries under 30 age. So 30 under 30 is what I call it. And the third is, so I took an iPhone as soon as my CA got completed, got placed in JP Morgan. First salary, I bought a lot of gifts for my family and friends. And then second salary, immediately from the second salary, I purchased an iPhone. iPhone 4. That too I purchased from USA. So since I was working in JP Morgan, we had a lot of connects from there. So I ordered it from there, got it here because I was so crazy for it. Then travel 30 under 30 means I traveled 30 countries under 30, and I had this dream. Till age of 25, I had not even traveled one single country. But then later on, for the 5 years, I thought, chalo, now is the time, let's travel. So completed this also. And then I also had one more dream, and that was to own a car. And that's what my example for today is related to. You should also have dreams. Then from 21 to 30, from 31 to 40, I have a dream. Currently, I am in that phase, 31 to 40. So in that phase, then 41 to 50, I have some more dreams. So that's how it should be. 10-year planning. So car, I purchased i20 Hyundai was my first car, and that's what I purchased again from my initial salary. So after 6 months, I had a good decent surplus amount in my bank account. Used that to give the down payment, and then purchased my own car. Yes, I was very, very happy with it. I had a very, very big passion for car, and I purchased it. Now, new car purchased. The main use of car was traveling from office to home, and home to office, nothing more. So my home and office distance was approximately 15 kilometers, and from office again back, I would get back to home. And then again, weekends would be with the friends and family. Weekends would be with friends and family. So that's how my whole system worked out. New car, I was taking it very nicely, taking care of the new car, ensuring that everything is in place. Now, just you know, traveling from home, office, weekends, enjoying with family and friends and everything. Things were going good until after year one, I got a call from the Hyundai team, maintenance team, and they told me that, sir, your one is over. Now we need to maintain your car. Please send your car to us. I said, okay, fair enough. I'll send. But are there any charges? They're like, yes, sir. So when I purchased the car, they had given me an option, 3 year warranty, and they were charging a few thousand rupees or something. But I didn't take. I said, no, if anything is there, I'll see later on. So I had not taken any 3 year warranty or maintenance or something. So I knew that I'll have to do the maintenance externally, and I was ready for it. Hmm. So now I got a call from Hyundai service center and they said that, sir, send your car for maintenance. I said, no, I'll send it to you, but you first tell me what are the charges. They told that, sir, 15,000 will be rupees, will be your charges for maintenance. So please send your car, and 15,000 after the maintenance is done, you can give. Now, I am a Marwadi person at heart. Now, you know how Marwadi people are. For them, everything is about apna sapna money money. Everything is about money. So same, even I started thinking. Now my car was running very very smoothly. I had no issues with my car whatsoever. Huh? So car was going all well. Still, these buggers called me and told me, no, no, sir, still you should maintain. I called what? Few of my friends and family. Two of my family people I called and I told them, should I do the maintenance? It is going in the right, it's going all good. There are no issues at all. It's going very smooth. He said, still, you should get the maintenance done. It's a compulsion. You can feel that way. Like, but everything is going good still. Yes, they said, still you have to do it. I'm like, okay, chalo, let's see. I'll think. Then I called to a few of my friends. They also said that, yes, Sankalp, you have to do the maintenance part. There's no doubt about that. But 15,000 rupees. So I thought that whether I should do or not. And finally, I thought, chalo, I'll take a call. I'll not do it. My Marwadi brain overpowered logic and said that no, let's not do this because things are going good. No, why unnecessarily spend? Huh? So I just skipped it. Again, second year I used the car very nicely again for these purposes. After year 2, I again got a call from the Hyundai maintenance team, from their service department. Again they told that, sir, now at least do the maintenance now. I said, no, sorry, I don't want to maintain. How much are the charges? They said, sir, 25,000 this time. I said, why so much? Last time you said 15,000. Sir, obviously now 2 years, so more oil will be required, brake filter and bonnet checking and engine oil and all of that. They started saying that technical things. Again, I thought, yeah, see, this year I'm not doing. Next year I will pakka do. Third year I will pakka do because so far car is doing good. Things are going well. Why should I unnecessarily spend? So I thought, chalo, we'll see what is to be done. Then came year 3. Again, in year 3, I had to do the maintenance. Again, I had to do the maintenance. And now I got a call and they said that, sir, this time it will be 35,000. Huh? I'm like, okay, but sir, last time you said that definitely this year you will do. Sir, now what is happening, sir? But the car is doing good, why should I do the maintenance? Again, my Marwadi brain overpowered logic, and I said, no, no, I will not maintain. Next year, pakka, sure. Your swear, I'll do it for sure. You would be thinking, no, sir is such a big stingy person. Shut, come on, yaar. I'm earning with so much effort, so every penny counts for me, yaar. Hmm. So now this is how things work. After 3 years and 3 months, after 3 years and 3 months, there was some sound coming from my engine. I realized something is a problem. Then After few months more, there was some more issues and everything, and finally year 4 was near. I knew that the maintenance call will come, and it did come. And this time I wanted to give purposely, because there was some sound coming, there were some wiring issues. At times the car had stuck in between, so there were issues. And I was like, chalo, this time I will give. I to ask them how much. They said, sir, 50,000 this time. I'm like, oh, so much? Yes, sir. Do you want to get it done? I'm like, yes, please. I'll send the 50,000 rupees, complete the maintenance and get back. They were like, yes, sir. We'll also check the car in case anything else. We'll let you know. I'm like, okay, no problem. Now I got a call from them after some time that, sir, the maintenance charges is not going to be 50,000. Sir, it is going to be 1,50,000. Ayo! OMG! Are you kidding me? 1,50,000 for what? Sir, this year the maintenance charges are there. Other than that, there are a lot of internal issues within your car. Alright, so what? Do it well, no? Sir, can't do it without this cost, no? But why didn't you tell me this before? Sir, you didn't come for maintenance. And that word stuck my head, that OMG, what did I do, yaar? Why didn't I come earlier? I asked him if I had come earlier. He told that if you had come earlier, we would have rectified this mistake earlier only, before it became so grave and so big. Then I told them, but I thought that what to do maintenance, sir? It's not like that. No, it's a car, it's a machine, and it has its own wear and tear. Oh, if I would have earlier given at least 15, I would have paid 16 to 60 to 75,000. Now, unnecessarily, because of my mistake, I have to give more money so that my car come back to the same quality. Basically, what I mean to say is quality now I'm going to get, but with a cost. As they say, quality comes, but with a cost. And who better than me would know this? Who better than me would know this? Boy, I was very, very upset with myself. But that's how it was. That's when I realized that, boss, quality is the most important thing. You should not compromise on. Got it. Okay. I compromised on the quality maintenance, and eventually my repair cost was so high that it would have been better if I would have spent on quality costs. And this is what quality does to you. And that's the explanation that was given by the Japanese people, by the US economist who went to Japan for work. So finally, I realized my thing. Now, this example, just remember, because now we are going to use this example to connect to our first concept, and that is cost of quality. Before that, I'll give you some more examples, some 2, 3 more examples. See, my whole teaching methodology is based on examples, because I know as examples you will be able to remember everything, and then it will become easy for you to apply. Second example is related to Samsung Note 7. Second example is relating to Samsung Note 7. This phone had such a bad battery that its battery exploded. Yes, and it was a very, very big blot on the name of Samsung. There were so many recalls. The goodwill of Samsung was up for a toss. They had reputational issues. Then everything. They had to replace the whole mobile phone. It was a disaster, nothing less than a disaster for them. But that's how it is. It is what it is. It is. So again, Samsung also realized that quality comes with a horrible cost, a cost of recall, goodwill, reputation, replacement. Not a good sign for any company. There was another company which did the same mistake. That company, very famous car automobile company, Volkswagen, Das Auto. Yes, even Volkswagen say made some cars, and say so Volkswagen, when it has to sell cars in USA, they have a certain norm. there is a pollution control equipment which they should put, and that pollution control equipment is a compulsion by the US authorities, but it obviously comes with a cost, so they did not put the pollution control equipment in the car. And eventually the the authorities of USA came to know about it, and they rejected the Volkswagen cars. They rejected the Volkswagen cars. They said that you have to recall all the cars. You will have to first replace the pollution control equipment and then resend it to it the customers. Again loss of money, because now you have to put this pollution control equipment. Loss of reputation, that oh my god, the Volkswagen cars have to be recalled. Not a good sign for any business, not a good sign for any company. And yes, they also paid a big cost for the quality, giving us, making us to our first concept. And that concept, by now you would have remembered, is called as cost of quality. Ladies and gentlemen, everybody with me. Yes, cost of quality. So, if you are making any product, focus on quality first. Your quality should be the best, so that there is no defective at all in your product. Mr. Sankalp did not focus on quality, and eventually he had to pay a big price for the defects. So was the case with Samsung Note 7, so was the case with Volkswagen, and there are so many examples that I can quote you. But now we realize that yes, quality comes with a cost, but let's focus. Let's be ready to pay the cost, so that we get the best quality and zero defect. So that we get the best quality and zero defect. Are you understanding, everybody? So, in a nutshell, what is quality cost? If you focus on quality, there will be less defectives. If you focused on, if Mr. Sankalp focused on maintenance, he would have paid less amount in repair. If Samsung focused on battery testing, battery quality, battery overall working, they would have not paid a amount for recalls, goodwill, replacement. So is the case with Volkswagen. And that's what, guys, cost of quality is all about. That's what cost of quality is all about. It is divided into two parts. One, focus on making good quality products. So obviously there will be a cost of good quality. As a result, your cost of bad quality will go down. As a result, your cost of bad quality will go down. If we focus on good quality, cost of bad quality will go down. If you do not focus on good quality, your bad quality will go up. I am now going to make a big sarcasm on each one of you. If you do not study good for your examination, it is like that. Study good and you will not have to see failure. But if you don't study, you know what I am trying to say. Right. Okay. So this is about your cost of quality. So what it is? So we will say cost of quality is two things. Before production or pre-production, or you can say during production, you have to focus on its quality, called as cost of good quality, called as cost of conformance. It is also called as cost of conformance. Conforming to quality products is called as cost of conformance. If this is good, then it will result in good post production or lower post production defects, which is your cost of bad quality. and this basically is technically is called as cost of non-conformance. Done? Got it? So that's how it works. Now, Mr. Jurang, the person who came from America to Japan to develop, he said that this cost of quality is divided into four parts. This cost of quality is divided into four parts, which now we are going to study in the course of our whole topic. So I hope we are clear with what exactly is your cost of quality. Now we will get more into the details as we move on, and this is the four division that he did and all of that. Now let's open our textbook. Let's open our textbook and start with the whole chapter. The first concept obviously being cost of quality, but before we move on to cost of quality, there is a backdrop related to it. Let's understand that backdrop and let's get started. So please open your textbooks, your theory book, so that we can start on a positive note. Sure, let's start. So, modern business environment. We started with an example, and I am going to connect to that example very, very soon. Stay tuned. Wow. So, here we are. During the past 2 decades, the business environment in many sectors has been characterized by rapid changes. Now, it is very important for us to read every theoretical line because everything can be asked in anything can be asked in MCQ. So yes, so very true. The first paragraph is mainly an introduction, just telling us that the business environment is undergoing a lot of changes, and there are a lot of plans and policies that a company will have to take to ensure that things are in place and everything is going rightly. So let's take it forward. The environment is ever changing and dynamic in nature. Again, can be asked for, yes, MCQ. The modern business environment drastically changed shape entirely in a different manner. It has now become a challenge for business managers to understand their business environment and formulate business plans and policies accordingly. Business technology has advanced business functions and operations to new levels, and hence the role of accounting is very, very important. So, this is just an introduction, just trying to say that yes, business environment is very important, characterized by rapid changes, and how managers will adopt to it, how will they make their plans, policies accordingly. Now, the most important thing that has happened with business environment, that it has converted itself from traditional to new environment. What was there in traditional environment? It was a cost plus approach. As in, if I am a businessman, I will calculate the cost of my product. Say if I am making a calculator, I will calculate the cost of the product, add the margin to it, profit margin to it, I will get the price of this product. But now things are changing. Now the pricing is competitive. So there is a case of competitive pricing. So the price is decided based on the market scenario. Got it? Then is response time determined by suppliers, but now it is based on JIT. See, now what used to happen is, I'll tell you. The system used to be seller's market previously. In the traditional system, the market used to be seller's market, but now it has become buyer's market. That's right. Now it has become buyer's market. So from seller's market to buyer's market, how things have changed. So this is what this whole distinguish is all about. Cost plus approach, competitive pricing. In terms of pricing, see, when it was sellers market, there were hardly 2 to 3 sellers and there were so many buyers. But now there are many sellers, so buyers have a negotiation value, right? So previously, when there were less sellers, the sellers used to determine the price. Now there are many sellers. So pricing is based on competitive pricing. Pricing is based on competitive pricing. Response time, it was determined by suppliers, but now it is just in time. Previously I used to say, oh, it will take 10 days, 15 days. Ask your parents, just to get a phone connection at your home telephone, they used to wait for 8 months, 9 months, 12 months. Now you get a call from them, sir, please take phone connection from my company. How things have changed. Response time, it was determined by suppliers, now it is just in time. You order and you will get whatever you want on immediate basis, called as just in time. Quality determined by service or product provider, better than customers expectations. Previously it was whatever product you used to get, you will take it, keep it with you. But now you will expect, and in fact you will get better than your expectations. And performance, it was dictated to the customer, now it is efficient and effective. If it is effective and efficient, all right guys. So that's how the whole system is based divided into traditional environment and new environment. Traditional environment, cost plus approach, determined by suppliers. Quality based, determined by service or product provider, now better than expectations of everybody. Previously performance was dictated to the customer, now everything is efficient and effective. Also, as a result of this, the characteristics of modern business environment are a lot. First, because of sellers to buyers market, now the number of sellers have increased. Why? Because of globalization of world economy. See, till 1991, India was a restricted economy. After 1991, we started LPG, liberalization, privatization, globalization. What is globalization? Asking the outside than India companies to come to India and develop the product. So now you are competing not only with your product, but also not only with your local products, but also with an international product. See here, fierce competition among organizations within and across countries. Now this is how the modern business environment is characterized by. You have to use new managerial methods to be relevant. Survival of the fittest, as said by Charles Darwin, is now the concept used by every business. Global excess capacities in production. This is the case of China. China for the last 20 years has built huge manufacturing capacities. Huge. So as a result, they have a lot of excess capacities. I know a lot of my friends, my colleagues who, when I was working with JP Morgan. Just a moment. Yes. So global excess capacities in production, services, and in some areas of development. So China last 20 years has produced a huge amount of capacities. Uh, as I told you, my friends, colleagues would go to China. Whatever costs rupees 20 here, the Chinese manufacture it at rupees 2. And they have so much of bulk manufacturing that whatever excess capacity is there, they can send it to the whole world at a very, very cheap cost. And that's what China has been doing for so many years. So global excess capacities, availability and accessibility of data and knowledge has become so easy on account of internet. So the customers know what is being sold at what price. You just go onto Amazon or a Flipkart and you have the price of almost everything and anything that you want, right? Timely availability of materials and services. So now things are available on time, 1 day delivery, from 5 day delivery to 1 day delivery to half a day delivery to 10-minute delivery. That's what we are. Ease of global travel and transportation. You can travel to any part of the world, get the product that you want, get the service that you want. So that is how the modern business environment is characterized by, and a lot of it has changed in terms of macroeconomic, technological, political, and social changes. And now, as per today's businesses, there is just one challenge, and that is to satisfy the customers through exceptional performance of your processes. So, your process has to be so good that the customer has to be satisfied, should get the value for the money that he is paying. And for that, three concepts are going to be very important. Just look down there. First, cost of quality. Second, total quality management. Third, supply chain management. Cost of quality, total quality management, supply chain management. Are you understanding? Are you clear? Done. So now finally we are moving on to our first concept. The base that I had set for you all through my example is now what we are coming to. But so this was just an introduction wherein we came to know the rapid changes, the changing dynamic nature, resulting in the companies formulating better business plans and policies. Technology became advanced, and yeah, that's how it worked. How the traditional environment changed to new environment, from cost plus approach to competitive pricing, from focus on suppliers to just in time quality, now has to be given above customers expectations. And the performance is also becoming effective and efficient. How is the characterization of modern business environment? Globalization, competitiveness, many new methods, global access capacities, accessibility of data knowledge thanks to internet, timely availability of material, and ease of travel and transportation. Now we want the customers to be happy, and for that we need to ensure that we focus on cost of quality. Now the first question that will come to your mind is, what is quality? I'll tell you. First, giving the customer what it wants. Conformance to specification of customer is what is quality. Simple. You need a 100-hour batch from me. I have to ensure that I give it to you somewhere around those number of hours. Conformance to customer specifications. You need a totally fresh batch. Done. If that is there, satisfy customer expectation. Amount, you are paying a value for money. If you are able to clear it in the first go, you will feel that yes, the worth, the value for money is realized. Are you understanding? So that's how the characterization of quality is: conformance to customer specification, satisfy customer expectation, and give them value, VFM, value for money. This is what quality is. And in order to give this quality, we need four things. We need to incur a good prevention and appraisal cost to ensure that my internal failure and external failure is reduced to minimum. So there is components of cost of quality, which has two components. One, cost of conformance relating to good quality, and non-conformance relating to poor quality, which I had taught you all in my examples. If Sankalp had focused on this good quality cost of conformance related to prevention and appraisal, or even Samsung Note 7, or even Volkswagen, cost of conformance would have been lower. So what are prevention costs? What are appraisal costs? So for you, I have derived a simple meaning to make you understand. You'll not find it anywhere. So just focus here and you'll get the answer. So first is prevention cost. What is a prevention cost? A cost incurred on designing the product before the product goes into the production. So before, cost incurred before the production. Costs incurred before the production is prevention cost. Simple. Second, what are appraisal costs? What are appraisal costs? So during the production, the costs that you have to incur, whether the machine is of proper quality, whether the raw material is being processed properly, get few samples of the production, whether the samples are of desired quality, is appraisal cost. So cost incurred during the production. During the production. Third is internal failure cost. Now, after the production, after the after the production is done, after the production is done, if you find any defective quality product, then you will have to rework it, you have to redesign it, right? That is called as internal failure. But ensure that the product is not out of your factory and gone to the customer, because that will become external failure cost. So after the production, if you test, oh, there is some quality issue, you will have to do a remake of that product called as a internal failure. So after production, but before the product leaves the factory, before the product leaves the factory. And finally, we will have the external failure. Finally, we will have the external failure, which is customer level defect. Goods are out of the factory, gone to the customer. Customer says, oh, this is not good. Return it back. The warranties and the guarantees and all of that is external failure, customer level defect. Customer level defect. Are we clear, everybody? Prevention, appraisal, internal failure, external failure. If focus is properly on prevention and appraisal, automatically internal failure, external failure will go down. Let's come back to our book. Let's come back to the theory. So cost of conformance and cost of non-conformance. What is cost of conformance? Cost of good quality. Prevention, appraisal. Cost incurred to avoid poor quality of products, to minimize number of defects, as I told you. Planned and incurred before actual operation. Hello? Before actual operation. Associated with design, implementation and maintenance of quality management system. Could be quality planning, quality engineering, quality design, quality review, quality training, quality audit, quality supplier evaluation. Everything related to quality is your internal is your prevention cost of good quality, cost of conformance. Gotcha. Then we have the appraisal costs. What are your appraisal costs? So here we are. Now, ensuring that high quality standards and performance requirements are adhered to. So associated with suppliers and customers evaluation of purchase material, processes, products. So see here, when the raw material has come, first when the raw material has come, check raw material is proper or not. So purchase material is proper. Then put it in the machine. Is the machine proper? Equipment is proper or not? They are products and the equipment, evaluation of purchase material, processes. Basically, your machine is proper or not. Then make some samples. Are the sample up to the specifications or not? All of these things have to be checked in the appraisal cost. Field testing, package testing, equipment testing, product or process acceptance in terms of samples. Right? Then comes internal failure. If there is any issue at this level, which means that there is a defective product that has been manufactured. So after the production, if still there is a defect, we will say it is a IFC, internal failure cost. We will say it is a IFC, internal failure cost. So incurred to remedy. So now there is a issue. There is a problem with the material, with the product that has been made. Now how do I rectify the mistake? Right, so see how it is worked is this, that if there is any defect, if there is any defect in the product, you will have to take it before it goes out of the factory. So after production, before it leaves out of the factory, if there is any product issue, it has to be resolved, and that's what internal failure cost is all about. Incurred to remedy defect discovered before the product or service is delivered to the customer. Cost incurred to correct deficiencies caused by error in products and inefficiencies in processes. All right, guys. So FC occurs when product not as per quality design standards, and that's the reason, it would be broken or something of that sort. Say for example, if you can see this calculator, if there is one button which is not properly put up, then you will have to do the rework. If more than 5 to 10 buttons are not proper, then it will be a scrap. There could be some chipping on the calculator, you would have to redesign or probably retest. So all of this is a part of your internal failure. And if the product has gone out of the factory, and if it meets, if the customer gets that bad product, then in that case, sorry, but this is called as a external failure cost, incurred after leaving the factory, detected by the customer, incurred to correct defects discovered by the customers. Occurs when product or service fail to reach the design quality standards, not detected until transferred to customer, causing dissatisfaction. And warranties, complaints, you will have to give customer support, there will be lost market share. Suppose if you do not give a good quality product, then the customers will not refer it to some other customer, and as a result you will lose the market share. So that is a big problem. Returns, you will have to incur on return and allowances, there will be a liability on you. So all of that is a part of your external failure cost. So in a nutshell, just read this line and you will understand a lot of things. Higher the prevention and appraisal cost, lower will be the defects and internal and external failure. I hope we are absolutely clear as far as cost of quality is concerned. As far as cost of quality is concerned. Got it, guys? So cost of quality comprising of two things: cost of control, cost of failure of control, also called as conformance, non-conformance cost, also called as good quality, poor quality costs. Right. The best approach will be to always remember cost of quality is calculated as a percentage of total cost, which allows comparison of cost of quality across projects or companies. I'll give you an example. See, now when I'm making a product, let's take an example. Okay. Now, if I am making, say, a product A, product X, I will incur prevention cost, appraisal cost on them. Say I incur 2 lakh rupees of prevention cost, 3 lakh rupees of appraisal cost. So can I say in all 5 lakh rupees I have incurred, right? In turn, it will result into internal failure and external failure to the tune of 6 lakh, to the tune of 7 lakh rupees, giving a total of 13 lakh, a failure of 13 lakh, right? Right? Now, in terms of percentage, see how much total cost, total quality cost is prevention plus appraisal plus internal failure plus external failure. Total quality cost is 18 lakh rupees. Yes, and that 18 lakh rupees now we have to find as a percentage. That's the whole point. So say 5 divided by 18 and 13 divided by 18. So we come to know that we are focusing how much on cost of good quality. 5 divided by 18. Oh, only 28%. And here it is 72%. So now what we will do, we will try to reduce the internal external failure by increasing the prevention and appraisal cost. So let's try and do that. Let's try and do that. So suppose now I focus more on prevention and appraisal, right? So say prevention cost is 4 lakh, appraisal cost is 5 lakh, total works out to 9 lakh, right? This will result in internal failure and external failure. This will result in internal failure and external failure. So 1 lakh and 1.5 lakhs and 1.5 lakhs. All right, guys. So overall, now we know that how much is this? This is 2.5 lakhs. Yeah, 2.5 lakhs. So now we know that, see, overall cost has reduced. Overall cost has reduced to 11.5 lakhs, to 11.5 lakhs. Now if I see 9 divided by 11.5, it is approximately 78%, and here it is approximately 22% of total cost. Now the difference, when your when your prevention appraisal cost was low, your internal external failure cost was very high. You realize that, you improved on that, and now see, once you increased it to 78%, look at the internal external failure gone down to a very, very considerable extent, right? So this is what we say, that as a percentage of total cost. So here we see that the costs as a percentage. So prevention cost as a percentage of total cost. Internal external failure as a percentage of total cost. Are you understanding, guys? Yes. Done. Now the next concept is called as optimal cost of quality. So now see here, we kept on increasing the prevention and appraisal cost. Our internal external failure kept on getting down. But there will be a point, right, where we will be like, okay, enough of prevention appraisal. Now, even if there is an internal external failure, it's okay. That level is called as optimal cost of quality. See, we will want to be zero defect company, but may not always be possible. So, logically, when prevention and appraisal costs are high, your internal and external failure will be low. Your internal and external failure will be low. But if your prevention and appraisal costs are low, your internal and external costs are high. Your internal and external costs are high. This level, boss, this level is called as optimal cost of quality. Optimal cost of quality. Got it? Yes. So, hope all of us are clear with this. I'll just read it from this also. An increased expenditure in prevention and appraisal is likely to result in a substantial reduction in failure costs. Because of the trade-off, there may be an optimum operating level which combined costs are at minimum. The combined costs are at minimum. Acha, everybody. So, yes, this is your optimal cost of quality. Optimal cost of quality, right? So we got to know about the percentage of cost of quality. Now we are also aware of optimal cost of quality. Just to give you an idea that, sir, after doing this book, are we supposed to do the module? Well, my answer will always be no, because as you see, everything will be of whatever is given in the module is covered here. In fact, I'll be giving more things only. So at the end of the session, I'll just show you that how we have covered everything that is there in the module. Now we move on to the next concept called as the views regarding the cost of quality. So what are the views? First view is higher the quality means higher cost, which is true to a certain extent. Because if I have to give quality, I will need more quality checks. In order to have more quality checks, I will have need more laborers. So accordingly, everything is connected. More quality checks, so more laborers, so increasing cost. more packaging cost, all of that. Second, resultant savings are greater than cost of improving quality. Always, always, always. So see here. See this. Here from 18 lakh, we have gone down to 11.5 lakh. So how much we have saved? Effectively, we have saved approximately 6.5 lakh rupees. But to save this 6.5 lakh rupees, we had to incur a little amount, a lower amount. So the resultant savings are always higher. The resultant savings are always higher. Quality costs are those incurred in excess of those that would have been incurred if product was built for exactly the right the first time. If you are going to make the product the right the first time, then the quality cost eventually will go down to a very, very large extent, is what it says. So these are the views regarding the cost of quality. Got it? Done. Now we come to the PAF model. What is this? PAF can be asked in the MCQs. PAF basically stands for prevention, appraisal, and failure. We have to optimally incur prevention and appraisal to ensure that the failure is reduced to the minimum, bare minimum level possible. Prevention, appraisal, failure is the most widely accepted method for measuring and classifying quality cost. Will be asked in the MCQ. PAF used for measuring and classifying quality cost. This is the 5-step procedure that you have to follow. First, see, it is like failing in the examination. If suppose you have failed in the exam, then how you will determine the next path? So you will see, you will gather information up to why you have failed. So number of failures in the system, you will see how many internal failures are there, external failures are there, right? So number of failures in the system. Then once we know about that, then we will quantify that how much failure is there. Based on that, we will see the 4 listed elements, that the failure is on account of prevention, appraisal, internal failure, external failure. So that is finding out, charting out the 4 elements, then allocate resources, and finally evaluate the performance, So that's how the whole system works in case of PAF model. What is it? Find out the number of failures. Once you know of the number of failures, seek the data relating to that. Divide it into the 4 parts that we have just studied. Then allocate the resources to ensure that your prevention and appraisal cost increase, or prevention and appraisal focus is there. And then finally keep on doing this so that your performance will keep on getting better, better. Okay guys, done. So this is about your application of PAF model. Application of PAF, prevention, appraisal, failure model. Done? Done. Remember it? Okay. No need to mugify anything because it's an MCQ. So things will be manageable. And finally, this PAF model will lead to something called as the iceberg model, the last concept for the day. And after this, we will do 2 sums and few MCQs, and then we'll be done with the today's session. Sure. So iceberg model. See, iceberg is like our CA journey. Today, you are burning yourself in solitude. You are single, studying, working hard, sacrificing parties, sacrificing marriages, focusing, feeling sad at times, depression, anxiety, don't know at times what to do, feeling lonely. All of this will be taken care of once you get the name chartered accountant, once you get the degree chartered accountancy before your name. And this is what iceberg model is for the whole world. On 14th of January, I'll give you my example. On 14th of January, okay, only I knew how much hard work I had put to get this degree. On 15th of January, the result comes and the world will say, oh, how lucky. In just so less time, he has become a chartered accountant. But only we know the 5 years, the 6 years of energy, the sacrifices that we have put in to ensure that we get our degree to the best manner possible. So this is what iceberg is. Iceberg at the top will be very less, but beneath the water there are so many things which are involved. It is like our mother who is working so hard for us, but we will never be able to find out that how hard she is working. So it's like she's like the iceberg. We just see the tip, but below that there is a lot of hard work which is involved. And that's what the PAF model is all about. That's what the whole PAF model is all about. All right, guys. The iceberg model is all about. The iceberg model is all about. Okay. Now let's connect it with this. Let's let's connect it with this example. Even for the quality, what we see on the top is recalls, customer returns, waste, rejects, testing cost, rework, inspection cost, only these above things. But there is a lot of other things involved. The overtime that we will have to ask our employees to do if there is a rework, the excessive employee work or fluctuation. There will be delays in planning because you had planned for making 100 products every day, but out of that 10 products are defective, so you will have to first recorrect them. So there will be planning delays, late paperwork, there will be excessive inventory unnecessarily, development cost of failed product, complaint handling will be there, dissatisfied customer putting time there, incorrect completed sales order, excessive IT cost, field service expenses, there will be billing pricing errors. So there will be a lot of issues other than what can be seen at the top of the iceberg. A lot of other things like your CA degree. When you get the degree, people will just see this. Oh, wow, you are a chartered accountant. Overnight success. No, it is not. It is an effort of 5 years. A lot of sacrifices. Iceberg model. Got it? Okay, so with this, we complete today's theory session. Only a minority of the cost of poor and good quality are obvious, appear above the surface of the water. The reduction of cost underwater has a huge scope. If we identify and improve these costs, cost of doing business will significantly reduce. And this, ladies and gentlemen, is what iceberg model says. So we have to focus equally on these, because if these go down, automatically this will also come down. Got it? So this is about your iceberg model. Now next session we'll start with TQM. But before that, now whatever we have studied in terms of quality, cost and all of that, we have few practical sums that we have to solve. So let's start with that. So modern business environment. Uh, I'll just connect you to the module. See here, modern business environment and then buyer's market. They have just given one side of the story. I have also given you the other side. They have just told that, okay, cost plus approach. I have told you competitive pricing. They've told you determined by the supply. I have told you JIT. So I'll be one step ahead only from the module. Don't worry. Then from sellers market to buyers market, the globalization, global excess capacities, fierce competition, same language, availability, accessibility of data, timely availability of raw materials, all of that. Cost of quality, Joseph Juran, Philip Crosby, views regarding this high quality means high cost, savings, components of quality, good, bad, prevention, appraisal, prevention cost, its examples, appraisal cost, internal failure, external failure, right? Then two questions that now we are going to solve. Optimal cost of quality, its diagram, everything is taken care of, right? Everything is taken care of. Are you understanding, guys? Done? So now we are done with the theory part and we will be starting with the practical aspects. For that, you will have to open the practical book. Yes, the practical book is what now you have to open, because now that's what we are going to start with. Okay. Sure. Have you opened it, guys? Opened the chapter? Nice. Sure. Live Well Limited is a manufacturing company that produces a wide range of consumer products for home consumption. Among the popular products are, so it's the first question that we are solving. Huh? Among its popular products are its energy efficient and environment friendly LED lamps. Company has a quality control department that monitors the quality of production. As per the recent cost of poor quality report, the current rejection rate for LED lamps is 5%. 5,000 units of input go through the process each day. Each unit that is rejected results into a loss of 200 to the company. Hold on. Listen. See here. The current rejection rate for LED lamps is 5%. So there are in all 5,000 units. 5% is the rejection, which is 250. For every rejection, 200 rupees is the loss. So into 200. So 250 into 200 is how much? 250 into 200 is rupees 50,000. So that is the cost that you are incurring currently. Now, the quality control department has proposed changes to the inspection process that would enable early detection of defects. Oh, this would reduce the overall rejection rate from 5% to 3% of units of input. Yay! So previously also 5% was there. Now also 3% will be remaining only. But at least 2% reduction will happen. Hello, at least 2% reduction will happen, which is good. So from 5,000 into 2%, if I do 100 units, at least now will not be defective. So for these 100 units, 200 per unit, which works out to how much? Correct, rupees 20,000. Rupees 20,000 worth of money can be saved. 20,000 worth of money can be saved. But to save this, the improved inspection process would cost the company 15,000. To save this, 15,000 will have to be incurred. 5,000 is your net savings. We will say accept the project. Now, this is what the questions will ask you. They will ask you this typical question. You have to solve it quickly, like I did on the calculator. Give the MCQ correct answer. Bingo! Get full marks. Now, if this would have been a typical SCMP 100 mark paper, I would have opened this and solved it thoroughly, each and every word. But now, thankfully, we just have to find the final answer. So we can directly come to the solution without caring very much for the presentation part as such. Right? Sure. So what is the current system? Guys, I hope we are clear. Obviously, I solved it with the flow while reading the question, but found it pretty much manageable. No? So we'll solve. Current system is divided into two parts. That 5,000 units are there having 5% defect, which is giving 250 units defect into 200 per unit. So 50,000 rupees is the loss. 50,000 rupees is the loss. Right? Now, as per the new system, As per the new system, what is going to happen? See here. Previously it was 3%. Now it is only 3% effect. So can I say from 5 it has reduced to 3. So effectively 2% is what you will save. 2% is what you will save. So 5,000 units into 2%. 100 units is what you are going to save. 100 units. Yes, you heard that right. For every unit, 200 per unit you are going to save, which will result into rupees 20,000 savings. Good, which is good. 20,000 I'm saving. But. Now, I will also incur costs relating to approximately 15,000. So, in a nutshell, net saved is how much? Rupees 5,000. 20k minus 15k. 20k minus 15k is the net amount that you are saving. Guys, are we clear? Guys, any doubts you can ask me. Huh? I hope you have my number. Obviously, I had given it you all in the first session. Any doubts? I will be going at a good pace so that we are on time in terms of portion completion. At the same time, understanding is also there, depth is also there, basics are also covered, but overall 100% 360-degree things are there. But if and also tell me, how are you finding it in terms of understanding the concepts? So many examples I'm giving, whether it's valuable to you, value for money to you or not. Do drop me a WhatsApp once you watch down the sessions. Are you understanding the practical questions or not? All of this. Yeah. Okay. So this was the first part, guys. First part we had already solved on our own only. Second part. After the implementation, analyze the maximum rejection rate beyond which the proposal ceases. Ceases means stops to be beneficial. See now, after which the proposal will not be beneficial. I'll tell you. See, this proposal is beneficial. This year it was beneficial because we saved more than the cost that we are incurring. Cost incurred was 15,000. Saving was 20,000. 5,000 extra we are able to save. 5,000 extra we are able to save. Right? But if just think, just logically think. At what level will you stop? Suppose if you are getting a benefit of 15, say for 16,000 rupees, will you still do it? The answer is yes. Benefit 15, 16, say cost 15, 1,000 at least. 1,000 at least we are making a profit. If it is 15,001 saving, 15,000 cost, still I'm okay. 1 rupees at least I'm saving. But if this was saving was 14,000 and cost was 15,000, still will you do it? The answer is absolutely no. Because 1,000 you are losing. So till what time, till what benefit will you continue? The answer is 15,000. Below that, if the savings goes, you will not consider it, right? So that's what the whole point is, that our cost is very clear, 15,000. How much is the benefit that you are looking at? See, you know here that savings per unit is rupees 200 per unit. So how many units minimum you need to ensure to go ahead with this whole process? So you will say that savings, how much is the savings? At least it should be 15,000. So say your cost is 15,000, your saving should be at least 15,000. 200 per unit is your saving into x number of units is equal to 15,000. So therefore x is equal to 75 units. 75 units. Are you understanding, guys? Yes. This is it. This is the minimum number of units that I require to ensure that things are on the right track. If the number of units saved is 74 units, I'll not accept it. So how much is 75 effectively? So we will say 75 units out of 5,000 units is 1.5%. 1.5%. So in our first case, it was 2%. So we were happy. In our first case, it was 2%. So we were happy. We were like, okay, 2% is very good. Accept it. But if it goes below 1.5%, we will not. So how much is the savings? So we will say if savings less than 1.5%, then we will not accept. Then we will not accept. I will not accept. Are we clear? Suppose the savings is 1.4%. Suppose the savings is 1.4% of say 5,000. So can I say 70 units into 200 per unit? 14,000 rupees is the saving. How much is the cost? Hello, how much is the cost? Sir, 15,000. Reject. So at least we need that much. And that's what the answer is. You can read the detailed answer if you have time. Obviously, I have to get it done in terms of understanding and in terms of ensuring that if an MCQ comes, you should be able to answer it. So see here, 75 units each day is what we will say 1.5% rejection rate improvement. In other words, when the rejection rate is 3.5, 5 minus 1.5, 3.5, till then we will be accepting it. Below that, we will not accept it at any cost. Understood? Done with this question. Now we move on to the next question, question number 2. Yeah, sure. So open the question number 2. We will start. JK Limited produces and sells a single product. Presently, the company is having its quality control system in a way that at an annual external failure and internal failure cost of 440 and 850 respectively. Very easy. So question number 2 is what we are starting with. Okay. So now what they have said, external failure, internal failure. External failure 440, internal failure 850. So internal failure, external failure. How much is the internal failure? 850. External failure 440. Right? Yes. So total, how much is the total? It is 1290. It is 12,90,000. Then what they have said, as the company is not able to ensure supply of good quality products up to the expectation of its customers and wants to manage competition, what is it? It is expected to implementation of new system which will lead to a prevention cost and appraisal cost. So far prevention and appraisal cost was not there, but now it is there. So now we have a prevention cost. Now we have a appraisal cost. How much is the prevention cost, guys? 5,60,000. How much is the appraisal cost, guys? 70,000. Total how much? Sir, 6,30,000. Okay. And now, but what has happened? Obviously, the internal failure and external failure will go down. How much? External and internal failure cost will reduce by rupees 1 lakh. Huh? By 1 lakh, not to 1 lakh. So from 850, this will go down to internal failure cost will go down to 750. And what about external failure cost? It will go down to 4 lakh 10,000. Will reduce by 4 lakh 10,000. So from 440 to 4 lakh 10,000 to 4 lakh 10,000. All right. So it has gone down by 4 lakh 10,000. Oh, wow. It's awesome. It's awesome. So 4.1 lakh. So 30,000. In all, 7 lakh 80,000. Got it? So now your total cost is 13, 14 lakh 10,000. Okay. So financially, if you see, our cost has increased from 1290 to 14 lakh 10,000. But frankly speaking, logically, if you will see, even though the financial cost, overall total quality cost has increased, that's okay, because now at least our cost of good quality is being incurred and cost of bad quality has gone down drastically. So in the short term you will see the financial and you will feel, oh my god, this is too much, the cost has increased. But in the long term, the overall quality will ensure that the sales will increase and eventually the profitability will increase. All right. So I think we should go ahead with the whole process. The new quality control and recommend the acceptance from financial perspective. The recommendation may be a no, but from a non-financial perspective, it will be a yes, because quality, non-financial perspective is a quality, and quality is always to be honored. What is your advice to the company if the company wants to achieve zero defect through a continuous program? So that's the next concept that we will be doing, TQM, and suggest a suitable quality control level at minimum cost. So see, we will always want to be a zero defect company. Again, it is a part of TQM itself. So the second and third part, once we do TQM tomorrow, then you can go through on your own and you will be able to answer them. So as discussed, two questions from the practical book done. Theory thoroughly done. Now we will come quickly to our MCQ book and try to solve the first 25 MCQs. Sure. And now we'll be able to solve the MCQs in a very quick manner, because yeah, because we have done the theory concept so thoroughly. So please open your MCQs. In that we will start with the SK MCQs, because see, ICA MCQs are very separately spread out, as in there is a there will be a question on strategy, supply chain management, then TQM, then cost of quality, and everything will be jumbled up. But here in our SK MCQs, everything is as per the concept. So the first initial concept, cost of quality, is done, and for that we have questions till question 27. Yeah. So first 27 questions are now what we are going to solve. Probably it will take around maximum 10 minutes and we'll be done. We'll be done with today's session and we'll be done with three things: the MCQs, the practicals, the theories. And that's how every session we'll try to do all of that. Okay, sure. Now quickly, let's start with MCQ. So MCQ should not take time if we had done the previous part properly. Let's start. What characterizes today's business environment? Yes, the rapid changes, the dynamisms, correct? Definitely is what characterizes the, yes, the today's business environment. So rapid changes and dynamism. Then what is the main challenge for business managers in modern environment? What is the challenge? Let's see. Embracing stagnation, traditional practices, ignoring technological, understanding and adapting to rapid changes. So according to me, it is 2C. See, there will be few questions out of 100, say 2-3 questions will may not match with our answer behind. See, the answers are also given here behind. So few questions may be here and there. So few questions may be here and let's see. See, this is the final solution. At the end, every solution is given. So, but again, 2-3 questions may be a bit here and there, and that everything will match. Okay, so what has been the main revolution? Yeah, main revolution in the business environment. Tell me. Question number 3. Shift from buyer's market to seller's market? No. Transition from static to dynamic? No. Change, evolution from manual to automated? Yes. Yes. Okay. Change from service oriented to product oriented. No. So I think C. Evolution from manual to automated process. What is the current trend in business environment? Hmm. What is the current trend in the business environment? Tell me. Sellers market dominance, buyers market dominance. Yes, one side. What are the characteristic of today's buyers market? Limited globalization? No, no. Excess globalization. Lack of competition? No, no. Excess capacities in production? Yes. What does COQ stand for? Cost of quantity? No, no. Cost of quality? Yes, yes. Who popularized the concept of cost of quality? Can I say Dr. Joseph Juran? Yes. Okay. Then, what is the focus of concept of quality in the text? Conformance to quality? Quantity? No. See, what they are asking is this part. They are asking this part. Quality, conformance to customer specification, satisfy customer expectation, value for money. This is what they are asking. Conformance to customer specification, definitely we want satisfy customer expectation and give value for money. So what is the focus on concept of quality? Conformance to a specification and customer expectations. 8b. Then which view suggests that resultant savings are greater than cost of improving quality? Hmm. Savings are greater than whose view? I think it was Deming's view. So this will come to know in the next session when we do the Deming's TQM. Next, what are the two broad categories of COQ cost? Price of conformance and price of non-conformance. Almost all the answers we should know. We should not even look at the alternatives. What is the term used for price of conformance? Cost of good quality. 11b. What is the main focus of prevention costs? Remedying defects, measuring, monitoring, avoiding quality problems? Yes. 13. Which cost category is associated with measuring and monitoring activities related to quality? Measuring and monitoring activities related to quality. Focus on quality is always on prevention cost. When do internal failure costs occur? Before the customer receives the product or service. What is the focus of external failure cost? Uh, Cost incurred of what are external failure costs? Basically are cost incurred after customer detection of defects. What does the term optimal cost of quality suggest? uh, Increased expenditure on prevention and appraisal leads to reduced failure cost. Yes, 16b. So according to me it is 16b. I think behind the answer is 16a, so correct it to 16b. Okay, next. Why is an external person recommended to determine the cost of quality? To avoid internal bias. Yes. To increase project team. No. So we need an external person so that bias is not there. Internal bias is not there. We can take independent decisions. What is the argument regarding striving for zero defects? It is helpful. Yes. It is economically helpful. Definitely it is. So 18a. Okay. How is COQ calculated in its simplest form? In terms of money, effort, no, as a percentage of cost? Yes. Purpose of 5-step process in PAF model. See, try to remember what they had said. PAF is the most widely accepted method for measuring and classifying quality costs. Yes. Measuring and classifying quality costs. Okay. Okay. What does the iceberg model illustrate? Hidden nature of quality costs, right? Yes. According to iceberg model, where are the majority of costs hidden? Below the surface of water. Next, What is the potential impact of identifying and improving hidden costs? Increase in business cost? No. Impact? No. Significant reduction in the cost of doing business? Yes. Then, in the past 2 decades, the business environment in many sectors has been characterized by, yes, rapid changes, obviously. Main revolution has happened from seller to buyer, buyer to seller, seller to buyer. Now the buyer demands. What is the challenge for business managers in today's environment? The major challenge, according to me, is, yes, obviously the understanding the dynamic business environment. Yes. And the last 27, concept of cost of quality includes price of conformance and price of non-conformance. With this, we complete today's session. All right, guys. So, yes, how was it? Do tell me, do let me know, because your feedback will ensure that we are on the right track. Hope you enjoyed the session. Time for me to say hasta la vista. Take care, keep smiling. And tomorrow again we will meet with new theory, with new practical, with new MCQs. Bye.